Good morning children. 11th Commerce Accounts. Question 5. Exercise question 5. Page number 50. As we have done dual effect of the transaction. In dual effect of transaction, we have seen that you have to write debit and the other one effect is credit. Also, we have seen the rules of personal, real and nominal. Also, we have studied how to identify whether the transaction is cash or credit. So here today we will do question 5th. As we have worked out question 4th in the same way, now we will work out question 5th. In question 5th also I have drawn the columns, dual effect of the transaction. I have drawn the columns in serial number, that is the transaction numbers. Name of the account means which two accounts are affected. Types of accounts means these two accounts are which type of account, whether they are real, personal or nominal. Reasons. Reasons are written means why you want to debit or credit. These reasons you can say it is the application of rules. Personal, first you will decide the type of account, that is real and personal, and then you will apply the rule of real. Okay, so this is reasons are in short the rules of accounts. Then debit credit. As I told you, first number 1 should always be in order, that is debit, and then the second entry will be credit. You cannot write credit and then debit. No. Accounts is the science and we have to follow the rules and the principles of accounts. So you have to write debit entry first. And then the amount. So I have drawn this column to make your work easy and easy to learn. In your textbook they have given all together, but here I have done in the easy way. So children, first one, as we have done in 4, commence business with cash. This entry you will get always first one because you are starting the business. In order to start the business, it is not necessary that you bring only cash amount. When you want to start the business, you don't need only cash, but we need cash, land, machinery, furniture. All these things also will come in the business. In this question they have not given, but later on. So all will be with number 1, that is debit. That I tell you afterwards. Now simple entry here, cash and capital. Started business means one account will be cash and the other account will be capital. Capital is always credited. It is owner who brings. Capital is always credited and cash comes in. Now children, you have to write types of account. Cash is which type of account? Real. Cash is which type of account? Real. What is the rule for real account? Real account. This is personal. And this is nominal. Okay? So I have written in short. You will be able to follow this. So in real account, what is the rule? Debit what comes in. So what is coming in? Cash. So cash we will debit. And capital. Capital is which account? Personal. And personal means who is the giver? Who will give money? The owner. So given, and so we are crediting, and so the amount will be 75,000 credit. So cash and capital are two accounts which are affected. Then second one, expense paid for puja. You can write expense paid for puja as miscellaneous expenses. So it is paid. When you pay, what type of transaction it is? Cash. goes out. So credit. Cash goes out. When you pay expense, cash will go out from your pocket. So it is going out and it is real. So apply the rule for real. Debit what comes in, credit what goes out. So cash is going out. So it will be credit. Okay, so this is second one. Third one is purchase furniture. Purchase furniture. As I told you, the word purchase will go with goods. But if it is purchase furniture, then you have to write furniture account, not purchase account. If you write purchase account, you are wrong. It will be wrong. Because purchase word we use always with the goods purchased. Not with the purchase furniture or purchase machinery or purchase vehicle, motor car, land, building. No, that is an asset. So you have to write the name of the asset, not purchase. Always remember. So furniture, and it is a cash transaction. So one account will be cash. So first you have to decide which type of transaction it is. Once you decide the type of transaction, your mindset will be clear that one account will be cash. So you have to struggle to find out the second account. Okay. So furniture account debit and cash account. Furniture is real because it is an asset, and again cash is real because it is cash is also a type of asset. It is our bank balance. It is our cash balance. So furniture account and cash account. Both are real. One comes in, goes out. Debit, credit. Then fourth one. Fourth one is open an account with the bank by depositing cash. Children, just think, in accounts you cannot learn any entry by heart because you have to apply the rule on the spot when the transaction is given. So you cannot learn anything. Only you can learn other rules, or you can learn the types of accounts. Otherwise, you cannot learn any journal entry by heart because which type of entries will be given, we don't know. So children, you are deposited in State Bank of India. When you want to go and deposit in the State Bank of India cash of rupees 30,000, what are you doing? You will carry 30,000 with you and give bank. You will give in the bank. You will deposit in the bank. So children, State Bank of India. Which type of account it is? It is personal account. How personal? Why personal? Because it is the name of the institution. It is the name of the bank, and all the names of person and artificial person are personal account. So personal. And cash, now you have learned always cash is real account. So personal account means what is the rule? Bank is the receiver. So what will be the rule? Debit the receiver. Here you are debiting. And cash, it goes out from your business. You are taking cash and keeping in the bank. So bank will be the receiver and cash goes out. So credit 30,000. This all entries are common. Every day you will get it. So you have to learn why it is debit, why it is credit. You have to think. Second one, next one, fifth. Wife's loan, taken from wife loan. Suppose if you take loan, what is happening? I am giving you loan. What is happening? In your business, cash comes in. When you take loan from any other institution, from anywhere, taken loan means what it is? Cash is coming in. Loan means in the form of cash. So cash comes in. And who is the giver? From whom you have taken? That will be the person or the bank or the institution. So children, cash account, because cash comes in when you take loan. And wife's loan account. Wife loan account is personal account. And why personal account? Because wife is a person. So cash account is real, comes in, debit. Wife's loan, personal, giver, credit. Wife is the giver. It is personal. So apply the rule, debit the receiver, credit the giver. So she is the giver. So it will be credit. Next one. have to write bank. Bank and cash are cash transactions, both. So here you have purchased goods and paid by check. So first account will be purchase account, which is real account. When you purchase goods, goods comes in. Suppose you have purchased books. So what has happened? Books are coming in your hand. So goods comes in. And bank who is making the payment? Bank is personal account. So bank is the giver. Bank will pay my money. So paid by check. So purchase, I have purchased goods and the payment is made by check. You have to think. See the next one. Sold goods and received check. So when the word received, I told you that cash comes in. Cash comes in. And cash comes in means debit. But here instead of cash, we are using the word check. So it is same. Instead of cash, we have to write bank. So sold goods and received by check. So bank account, personal account, receiver, debit 42,000. Second account is sales. Sold goods. Sold goods is real account and goods goes out. Credit 42,000. When you sell goods, goods are going out. So always sales account will be credited. Always. Even if you don't apply the rule, you can learn. Sales account is always credited because goods are going out. That is the rule which we have applied. Next one here, withdrawn. Withdrawn from bank. 8.1. The transaction is withdrawn from bank. Withdrawn cash from bank. Withdrawn cash from bank. We need cash, so we go in the bank and we will withdraw cash. So what is happening? Cash comes in. Cash comes in. And who is the giver? Bank. Cash comes in when you withdraw, when you take from the bank. It is cash comes in and who is the giver? Bank. So children, cash account, it is a real account. Bank account again I told you any name will be there. If it is given, okay. If it is not given, then for two we have to think that bank account is personal account always. So bank account personal. So comes in, cash comes in and bank is the giver. Debit, credit. Now your children, these two entry are here you are depositing. So cash is going out. And here you are withdrawing. So your cash comes in. And who is the giver? Bank. Here who is the receiver? Bank. That is State Bank. So both you can see the entries when you deposit, cash is going out, and when you withdraw, cash is coming in. And who is the giver and receiver? Bank. So both entries are reverse entries. So that all we can do later on. But here cash comes in and bank account. 9th one, paid insurance premium by check. Insurance premium is our expense. So it is nominal account. Nominal account. And bank again personal account. So nominal expense. Personal, bank is the giver. When bank pays, we will just instruct the bank and bank will pay our insurance premium. So for that reason here, insurance premium is our expense, so nominal. All the expenses are nominal account and bank is personal, so giver. In 10th one, received brokerage. Received brokerage. When the word received is used, you know it is cash transaction. And you know it is our income. If it is our income, then only we will receive. So received brokerage. So what is happening? Cash comes in. And how the cash is coming in? With the what is the source of your income? Brokerage. So cash account and brokerage account. Cash account is real, comes in 3,500. Brokerage, nominal, income, credit. 11th one, sold goods and received by check. You have sold goods and received by check. Okay, the same as we have done seventh one. So bank account personal, sales account real, bank is the receiver, goods goes out credit. Same way purchase and paid by check. Same purchase and paid by check. Check, when the word is used, we will use bank. So purchase account and bank account. Purchase is real, bank is personal. Goods comes in and the bank will be making the payment. So bank is the giver of money. So debit, credit, account. So these are the similar ones. Now see the 13th one. 13th one, withdraw cash from the business for personal use. For personal use. So children, if the word personal use is given, if it is given personal use, anything when the owner is taking from the business for his personal use, who can take from the business? Owner, not I or you. No other person can withdraw from the business. So only the owner can withdraw from the bank, from the business for his personal use. So whenever personal use is given, drawings account is debited. Always drawings account will be for number 1, that is debit. It is a personal account because the owner is withdrawn. So capital and drawings are personal accounts and they are the accounts of the owner himself. So drawings account, withdrawing cash. So cash is going out of the business. Cash will go out of the business. So drawings account personal, cash account real. Personal means receiver, goes out, cash goes out, debit, credit, 2,500. In the same way, 14th one, goods are withdrawn for personal use. Suppose I am making medicine, so I can withdraw medicine from my business when I need it. So, withdrawn goods, same way drawings, here you have written cash, but here instead of cash you will write goods withdrawn. We will write goods withdrawn. So because it is personal use, both the 13th and 14th entry are for personal use. We will write drawings account, personal use, receiver, debit. Goods withdrawn, real account, goods goes out. But goods, whenever goods are going out of the business, we write as purchase. This I will tell you later on. All the goods entries which are going out, we are going to show them as purchase. I have written in the bracket for you, but here you have to just understand goods withdrawn. Goods withdrawn for personal use. For personal use. Okay? Goods withdrawn for personal use. Here also I have written. So whenever personal word is given, we have to write drawings account number 1 is the receiver. And if it is goods withdrawn, then you have to write goods. If it is cash withdrawn, then you will write cash for number 2. Here, receive dividend with the help of check. Receive dividend by check. So, receive dividend means word receive is used. So, it is our income and cash is coming in. But here the cash is in the form of check. So, what you will write instead of cash? Bank. And dividend. Bank account personal, dividend nominal, receiver, income, debit, credit. So bank is the receiver. You have deposited in the bank. So bank, but whose bank account is that? Our, that is the businessman. So businessman is the receiver. He is not receiving, but his bank, his account will be added or will be increased. So here that much is enough. Bank is the receiver. Next one, bank interest is credited. Bank gives us many service, and for that reason, here when you deposit money, you will get interest. When we are going to deposit money, you will get interest on your money positive children. So here you have to learn this. I'll explain you later. But here we will write this way: bank interest credited. It is given. So when the bank interest is credited, it is for number 2, and in number 2 we write income. And so bank account, in bank, our bank will be the receiver. In the bank only debit added. In our account only debit added. So bank account and bank interest account. Bank account, personal, bank interest, nominal. Bank is the receiver, debit 200. And bank interest, nominal income 200. 17th one, bank has charged or debited bank charges. Bank will give us many services. For example, as in the 9th one we have seen, bank is paying our insurance premium, bank will pay rent, bank will give many other services to the customers, to the businessman, and for that bank will charge something. So bank charges are our expenses. We have to pay to the bank for the service which they are giving us. So here children, bank charges are debited. So bank charges account, bank charges is expense. So nominal, it is an expense, so debit. And who is paying? Bank. So bank account, personal, giver, credit. Bank is paying. Bank charges who will pay? Our bank account. From our bank account, from our bank balance, they will deduct. So this is okay here. This much here you will not be able to explain, because bank charges are, only you have to remember, bank charges are expense and bank interest is credited. So we have to credit bank interest, and bank charges are debited. It is given in the transaction, so you have to debit. And the other two account which is there, we have to write bank account. We have to write bank account. Here these are simple: paid wages. So one paid wages. So what type of transaction? Cash. So one account will be cash. And why you are paying cash? For wages. So wages account, nominal, expense, debit. Cash, real, goes out, credit. 19th one, loan interest is paid. What loan we have taken from bank, we have to pay interest on that. So loan interest will be our expense, paid. Loan interest paid. So one account will be cash. And for what you are paying cash? Loan interest. So again children, loan interest, nominal, expense, debit. Cash, real, goes out, credit. And the last one, purchase machine. Once again I want to explain you, purchase machine, not goods. So here you cannot write purchase. Here you have to write machine account. And what type of transaction it is? Cash. Because here the name is not given. So machine account and cash account. Machine, real account. Cash also real. Machine comes in and cash goes out for them. It is 12,000. So this is all about question 5, which you have to work out on your own once again. Not to copy. You have to think the type of account, apply the rule, and then you have to work out. So once you will write in your classwork, and then in your notebook you will do on your own. That will be your homework. 4th, question 4th and 5th. Okay? Now see children, homework I have given. Homework, learn and write question 5 and the rules and all this debit credit in your classwork. Now children, I have made some easy work for you. Debit account. These all are debit account and these all will be credit account. So children, purchase account will always be debited. Purchase account always will be debited. Why? Because when you purchase, goods comes in. So purchase account is always debited. But purchase return account will be credited. Purchase return account will be credited. You have to remember only one. Purchase account is debited. So if it is purchase return, it will be credited because goods goes out. Sales return account is debited, but sales account is credited. So we have to remember only these two, purchase and sales. Purchase is always apply the rule debit all the expenses. So you can learn this. Income account credit. Income account will always be credited because income received. The word received is used means it is your income and it will be credited. Credited means with number 2. And what it will be? Received dividend, received commission, received interest, received whatever income you have that you will receive. So received means credit always. When received, cash account will be debited. When the word received is used, cash comes in. So cash or bank check. When the word received is used, cash account will be debited always. And when the word paid is used, paid is used for what, as I already told you, expense. And received is used for income. So children, when you pay, cash or bank account will be credited. Why? Paid means cash goes out. It can be in the cash form or check form. So debit account, when received income, cash account will be debited. When paid, there is expense, cash or bank account will be credited. Bronze is always debited, capital is always credited. So these are the common one which I have put in the format, that is column wise. All these are debited always, all these are credited always. Now children, rules which I have already done. Once again, as we are ending this chapter 2, and I want you to learn and be perfect, because the next chapter is to write the journal entries in the proper form in accounts. So if your base is clear, journal entry will be same this way, cash and capital 1 to 1. So this should be thorough. So children, debit the receiver, credit the giver. In real account, debit what comes in, credit what goes out. But before this, you should know which accounts are in real account, which accounts are in personal account. You cannot learn only this, because if you don't know in personal account which accounts are there, then you will not be able to apply the rule. So you should know which accounts are there. It is given in the classification of accounts, which again you will do for homework. And in nominal account, debit the expenses and losses, credit income or gain. Expenses means for you have written pay and receipt. So this is all about chapter 2, dual effect of the transaction, in which first you will decide the type of account, cash or credit, and then you will find out the second account which is affected, and then you will find which type of account it is, and after finding out which type of account it is, you will apply the rule and then you will write debit, credit. So this is all about chapter 2, in which we have learned the dual effect of the transaction. And I have given you homework which you have to write, and also learn page 40. Learn page 40 for types of accounts. Just learn it. So you will write in classroom book once, and then you will do again in your homework book. You will practice, because the next chapter is same as we have done this. Okay children, thank you.